BTC dominance.
Yeah, it's been asked.
I mean, I can. I think somebody was. That's normally a Paul thing, but I can definitely look at it if they want me to.
Yeah, OC Pet wants it, I think.
Let me get
Pet wants it, I think.
Does he? I just saw something. There's somebody else that's live that popped up in my feed. It says the altcoin reckoning. He's probably spot on then.
Are they getting really wrecked, are they?
They will be against Bitcoin. So when Bitcoin dumps like that, it's not normally going to bode well for alts, especially when they're going to be the ones stealing most of the money, out of the space. Because you got to think anyone with any kind of actual like prowess in this market and actual funds, they're not putting their money in the knife catching fucking low cap altcoins. That's not a thing. It'll go back into safer assets like Bitcoin, things like that. So there's no reason for them to be looking for altcoins, I guess. There's Ethereum and a couple of them that maybe some institutions will get into, but just because they're an institution doesn't mean they're good with money. One of the biggest telltale factors of the ending of a stock market bull run is when large institutions start getting overly aggressive, those hedge funds, so to speak. T-Bone is first. Well, he's not first because he didn't say it, but he's in here.
If you didn't say it, don't count.
You got to say first or you're not first. What is up, Mark? I hope you're well.
I think I'm just going to talk through the drop.
Yeah, I figured that you would. The drop was pretty much all order flow at this point. I mean, outside of the range, well, the ranges gave it up. The range rotations were the key, but then once you got down there, the trade to back to the point of control was all order flow at that point.
Yeah, I think that'll be what I'll go on about.
Man, we got a good amount of people in here. We got 17 people. Everybody's jazzed up. It was a busy day in the trading. Well, it was a busy hour, I guess. And then it just kind of ranged at the top till we get this nice dump. So, Dennis, bro, what's going on, man? Good, fair amount of people, 16 people. Cool. Do me a favor, guys. As always, you know what to do. Smash the like, do the whole bit. We appreciate it. Just kind of helps, put out the live since we do the public one every now and then. We need to get back to the morning ones. Maybe we'll do one tomorrow when we get up for New York if we've got some good action. It's just been hard to do with basically being so range bound, and we're not really ones to put out, things like pump or dump titles, so to speak.
We should definitely start.
You think we should start clickbaiting people? What do you guys think of that? Should we clickbait? Should we clickbait people? You guys tell me. Should we clickbait people?
You can do a face reveal for the people that haven't seen pictures of you with your
actually that'll be coming very soon. So I've got a guy coming in to help me finish what I've got left to do on the house. I'm just gonna pay someone to do it. That was actually what I was looking at before we started the stream. But he's gonna put in the new flooring in the downstairs for me, so I don't have to do it. And once that's done, I'll have a whole new office, new floor, new walls. I've got a mountain there already. I just got to move the desk in and we're good to go. Nice leading crypto, banner. You guys will love it. You guys can see my pretty face if you want. I know you're all into that. So, but yeah, this is a pretty interesting move this morning. Recap, if you were in the group, we were looking at this, fairly. It was a pretty simple, outlook on this. It really was. You had your move up to the highs, right? And let's just call it to right here. And what are we on, the 15-minute? Good deal. You could have easily bisected the ranges rather than looking at it as a whole structure here. You could have, said, okay, I'm only interested in what's available to me, giving you this area on the chart as support. And then you had a previous POC here, but this is a dynamic range, so it will change. And you'll notice it does change as this, pulls forward. It does change a little bit. The POC rotates up, but it leaves the one down here telling you that, well, if we start losing this area, which was yesterday's daily pivot as well, if I recall, let's turn that on real quick. Yeah, you can see right here, this is yesterday's daily pivot, point of control. You lose those things, where are we going? Well, most likely you're going to head back to the old point of control and the old val, this little box, which is exactly what happened. You came through, you dumped through it, right? Once we knew that was happening, we had the daily on deck. Again, not much of a bounce. We're looking for a range break, was really looking for lower. And that's where Max will come in a little bit. I can see it in the order flow too, but that's kind of his area. And that was really the play. If you weren't able to watch the order flow, this was a pretty tough trade to make at the lows. However, if you were watching the ranges, it was a very nice trade. As soon as you basically regained the overall range low, which does come in, right in this region around the June of 2021 summer lows here, you get back in there. This is a pretty quick move through the ranges, right? And what you're looking at is, well, a move all the way back to the POC here before we shifted down anyway. You can see that here. You just all the way back to the point of control, almost filled an NPOC from prior sessions. And that's a big take profit if you're in a long here. You have to be looking at that as a take profit, because we all know that, well, if you're going to back test an old section of price, more than likely, you're going to want to be looking at the areas in the chart that matter most, which a lot of times is going to be the point of control, value area low, things like that. And you can see this lines up very nicely and gets you that level that you needed, and then from there, as you continue to, like I said, it's a dynamic range. This one's going to change, but you can utilize the data as it comes in. We can probably start to get rid of some of these boxes, clean this chart up just a little bit now that we've gone over that. And we can probably get rid of it. Now the daily's still relevant, because, so one thing I want to point out, and we talked about this when we actually came down into this range as a whole, just because this wasn't support on the way down doesn't mean it won't become support again on the way back up, which this was a really nice back test. So there were a lot of entries that you could have gotten in on for this move. It's just the issue is at that point, your invalidation gets wider and your reward gets less and less, right? So it's a riskier trade. So at this point, if you're not taking a trade all the way at $29,000 and it's ran from, this hit the lows of 27,929, and you waited a full $1,000 to jump in, can you justify it? Sure. It's just not going to be 9 times out of 10. I wouldn't take that trade. Let's put it that way. That's not a good trade per se, but you had the back test here. I believe the VWAP was coming in that region as well. Really, really nice area, So you get above the VWAP, where you're going to, well, we've come back into a range. We knew that this was the old POC. So most probable that's going to be your target, right? So what have you done? You've come back to the lows of the range. The POC is now shifting down, right? So what you don't want to see is price now living underneath this 29.3 area, which was kind of the level in the update last night, was 29.3 and 29.6. Once you give up 29.6, you're looking for 29.3, you lose 29.3, and we expect to take the lows of the range. The question really is where is it going to bounce at? Because outside of this golden pocket, which has like a local swing failure pattern and an old NPOC, there's really not much down here. It's a really tough area just to say, hey, this is what I'm going to trade. You have to basically set alerts for the lows and then monitor order flow on the way down. And if you're not actively at your desk, there's really no way to preset for this. It's just not a very good trade unless you're just like sat ready for it, to evaluate. So, but you're back at the range low. Again, you need to get back above the POC of your range. You can see how this is already beginning to separate itself, and you can see how you have this shelf that's being built here. You really don't want to see price living in this region and building up a high volume node down here and leaving this one behind where it's going to be starting to cut off and you get this B-shaped range. So you can see how that starts to come out. That's what you want to avoid. So price does need to kind of get with it here. Otherwise, you start living in this region too long and pushing down through the range. Is it possible to get a bounce out of like the golden pocket here, backfill some of these inefficiencies? Sure, definitely is. Again, the things are going to tell you that are order flow when you get there. You got to set alerts. I would never preset for the area, but the longer you live down here without regaining this 29.3 level, again, key level from last night, you got to think you might be challenging back into the lows. I don't really think it's a death sentence for Bitcoin, though, in that case. It's really one of those things where coming down to this region, it's to be expected a little bit over time, and we can go out to like a higher time frame here. This is a really good illustration also of the price action today and why this doesn't look good. And you can see we've done this before, right up here. We did this on the higher time frames before. This is a really good example of repeat volume analysis, so to speak. And we'll clean this up a little bit. We'll take this back to here. And so again, you come up here, you've got your shelf being built, and you've actually regained the level in this instance. We talked about that, and 40.3K was really the key level in this case. But once you give this back up, it's not good, And so when you look at this here, even though you had this SFP of the lows here, you really can't be living below. We're at here 29,300, even on the overall merged range. So you're looking at this and just saying like, hey, we've got to be living above 29.3. The longer we live below here, the more this shelf gets built, the more it looks like further selling is being taken place. And this really does kind of tie into what Max had said the other day, where he talked about, if we're looking at, range analysis, positions were really being built up here, and market makers aren't going to pay the people that are building those positions. It's most likely to, cause some pain. And there was some pain today, don't get me wrong. Lots of shorts trapped at the lows. So the recipe is there if this can regain 29.3 to do some things. It's just, as of right now, I wouldn't be satting along that I hadn't at least taken some profits on, and had a good stop loss on. I'd make sure that I'd taken care of and hedged against that. But that's just me. I'm only in a short right now, so I'm not in any longs. So it's really all I've got. It's quite simple. If we start losing this June 22nd low from the summer, right? That's all the way over here. That's the key level to hang on to. You start losing that, living below this range, actually closing some candles below here. Well, I don't see any reason why we wouldn't at least come to this 27K-ish region. I think there's a different NPOC at 27 that Max has on his chart, and then we do have a little 15-minute time frame down here as far as that is likely to eventually get filled. So it would just be a challenge into the lows at that point. So I would just trade the price for what it is, because if 29.3 is regained, I mean, to me, that would look probably fairly bullish at that point. And we could look up, and trade it accordingly. But for me, it's just, I've been sat in my shorts from up here now, re-entered some shorts. I'll just sit in those and take profits on the way down, take care of the position, get paid, and see what the next best trade is. I could care less what the next best trade is, whether it's a short or a long. You guys know that. So that's all I've got, man. We'll cover altcoins after you go through some order flow, but not a whole lot to really talk about. Pretty simple day if you were sat and ready anyway, if you were ready for it.
Let me get my screen up then. Get my screen up. Right, so the first thing I actually want to talk about is what we actually went through yesterday. Now, in the members stream, we were somewhere in this region, right at the top here, well, in 29,800, so just below 30K. And thanks to Twin begging me in my DMs, we did a bit of LRA, locked in range analysis, and we determined that, in this area, in this range, going from market structure, so you've taken the low here to the high here, we determined that there was more longs in the range, and we expected the lows to be taken so that we could then move higher and not have, the longs be paid, because like magic, the market makers aren't going to pay the majority. They're going to wipe the majority out and then punish them and make them buy up higher, where they will then be selling to then dump us down again. And that's just the way the market moves. But yeah, we determined yesterday we expected the lows to be taken. Now, it wasn't a massive, decline in the CVD, so it wasn't like a massive washout. Obviously, there was there was a lot of volume down there, which we will go in and have a look at in a minute, but it wasn't huge, So I was surprised that it wasn't bigger, the amount of longs taken out. It was certainly a big drop, but nothing, mad to really think about. But the next lows that we've got to take are this one here. And this would also link you with coming into the gold pocket. If you lose this one, you've got the gold pocket in this region. And then, yeah, we've got some naked point controls down here from in between. Let's have a look, because it's from 27,500 to 27,000. It all depends on what tick size you're using. So this is one that I'm watching at 27,000, which is the one tick, which is the exact previous like NPOC for this day. But if we go up the ticks to trading views 40, if I can actually type trading views 40, I'll actually see this down there as well. Which tick size shows you one tick size? There you go. So that's one tick size, which is what everyone else is looking at. But yeah, you've got the two. It's more of like an area, you know, from 27,500 to 27K exactly. You've got a box, and there's the gold pocket at the top here. But if everyone's putting their, you know, limit orders at the gold pocket, you could just pass through it. And if they're not putting their stop losses at the exact low, normally they'd be putting their stop losses just below the gold pocket or like the 702. And they, in my opinion, will most likely get stopped out from that trade. They'll just take them out just to punish them for putting limit orders in. That's why we always say trade the reaction. But yeah, let's get into how one could have got into. In fact, I'm going to go into trading view and show you how you could have got into a short yesterday in advance. Okay, so we were up here after we determined that there's more longs in this range. How could one of, you know, got into a short or got out of a long position in a drop? Okay, so we're up here. You've determined there's more longs in here, and we're going to most likely go and take them out. Well, you're trading around the VWAP. You're going above it, below it, but then you lose it. You back test it, then you come down, and you come back up, and you back test it for the second time. If you're trading the VWAP, you know, these are the type of signals that it can give you to maybe think, okay, maybe this is looking weak, and perhaps I need to get out of a position. And then of the VWAP, you get PVA candles forcing you down, which, you know, we pointed out here that the chances that you're going to come and retrace them because of the statistics that we've got built in the group, that, you know, the chances are that you're coming back and refill or backfill these PVA candles. And we do have them to the lows here. So, you know, we've already pointed out in the group where we expect them to go down here due to the statistics that we've got built. But yeah, that's how one could have got into a short in advance from the drop. And then when you come to the low, so the low of the range, I think it was around 2,500. 27,000, 28,500. I think it was around here. It was the low for the whole market, which I actually got it marked out. I did have it marked out there, but I think it was around 28,560 region. And, you know, we came down. It was pretty strong to move down into this region, but then you were somewhat ranging above it. I'm on the 1 minute here, which is disgusting. I need to get on the 5 minute. Yeah, and you were somewhat ranging above it. Obviously, this daily open wasn't there at the time. How could one have got into a long after? So you've come down, you've had a huge washout of open interest, which, you know, does signal a potential reversal when you get such a huge move in the open interest. And the volumes also, look at that 162 million volume in a 5 minute candle. That's insane. There's so much volume taking place there. And after you've seen the bounce, you know, you've got buying imbalances down here. You've got one there. Granted, the open interest isn't favorable, but, you know, you've got to think $24 million worth of volume. How can that only produce 270,000 open interest? You know, it has to be something going on here. All the shorts or people getting, you know, closing out of longs, they're clearly getting absorbed. You can tell that due to the open interest decay. And also in this, you know, you can also argue that in this $162 million candle, how can that only produce, you know, a negative 23 million open interest? Arguably, there's some positions changing hands here. it's just all these type of things that you have to put into, you have to keep in your mind when you're thinking about when this trend, which is downward, is coming to an end and what's occurring at the bottom. So people are getting stopped out. If you do the net shorts here, people are clearly shorting at the lows, fools. And yeah, there's a lot of longs getting stopped out. However, yeah, like I said, the open interest isn't, though it is huge. Considering the volume in that candle, there's clearly positions changing hands. And you get the move away. You get some increasing open interest. You've got 24 million volume there, 10 million positive delta, and 2.7 million increase in open interest. You're getting the buying imbalances, which are the triggers. After you've had a move like this, a sharp move, normally you would expect some retracement back up. And with the buying imbalances that you're getting, it's a signal really to, okay, maybe I want to get in a long here. Where could you, if you were playing really safe, got into a position, or when you reclaimed the low of the range that we marked out around the 28,560 level, and you got buying imbalances pushing you through there on increasing open interest. It wasn't a short squeeze as of yet. And you keep going up. You also came up, broke the VWAP, back tested it. You've had two entries there. One on the reclaim of this level with positive open interest, lots of volume and buying imbalances. That's one reclaim. Or the VWAP where you've come up and back tested it. That's another one that you could have still got in a position there at 29,000. And where could you have traded that up to? Well, nearly a $700 move. Yeah, a $700 move. Everyone can make money on a $700 move. I don't care what anyone says. If you're using spot leverage, spot, $700 is very like 2 or 3% down here. So it's very good. And in the immediate right now, where do I expect us to go? Well, purely due to the statistics that we've got on the PVA candles, I do reckon that we come down and close this one out today. So that'd take us down to 28,450. Now the fun part is, what do we do when we get there? So I know Magic pulled this gold pocket. So that's just above it. So people will be trading that. Where's the 702 where some people put their stop loss? Always fun to check that out, see if we can stop them out. Yeah, so if they're putting their stop losses at the 702, a close of the PVA candle would knock them out of the trade. And then probably be a turnaround point or something like that if the low is not to be taken. Now, if the low is to be taken, that's where I'd start to be a bit cautious as to where we're going to go, whether it is that gold pocket just a bit further down. It's very possible if you do lose this area here. So this is the level of area of support that I'm kind of watching. If not, I do expect us to probably go and hit that golden pocket, at least anyway. But yeah, what's going on right now? If we check the VWAP for now. So we're still below the VWAP. So reclaiming the VWAP would be nice. Where's the day open? If I can mark that out. So the day open is here. Go back to the 15-minute where I can see. So yeah, you've got some purple candles to the downside. I've not actually run statistics on these as to what their refill rate is, but it is always possible that they come up and just close these out just to the dollar, then continue the move down for now. But yeah, that's all I've got in the immediate. Magico, where are you? What's the tick size that you guys use on XO? So the tick size that I use is
69.
Magic uses 69 because he's literally 2 years old.
Yeah, I think you can see it, but yeah,
Magic's still stuck in high school where he peaked.
Yeah. Oh man, I peaked in like middle school, bro. Like
there you go.
Grade. Yeah, 8th grade.
His humor stayed there.
Yeah,
I use 50 if I'm on this. It really depends on what time frame you're on. If I'm on daily, I'll probably, if I'm trying to get the exact levels, I'll use 1. But sometimes I use 50, 100. It depends how many. If you're zooming in and you just can't see anything. Sometimes I don't like to be zoomed in this much just to see, a few candles. So I'll up the tick size just to see clearly. But yeah, that's what tick size I use.
Just a second here. I'm actually updating something.
We've actually closed the hourly PVA out, which
Did
was, yeah. So the hourly PVA only took us down to 28,700-ish. We've actually just closed it out. Closed the last red one we had, and not the green one. But the lower the time frame goes a bit lower actually. So
yeah. Well, I mean, we're right at the low of that overall range. So
we're actually at 0.5.
Let's see here. Just a second. I have not done my due diligence for forks today, so I'm just knocking one out real quick here, and then I'm gonna hop on. One thing I do want to touch on is the importance of 29,800 level. That was super important last year. It's kind of a level we haven't talked too much about, which, you know, it's hard to ignore it, but you know, the overall low is the most important level in the immediate short term for trading. But on the high time frames, we actually have a couple really important levels. 50 and almost done here that I do want to actually go over. It's something that I kind of touched on last night, and since these are primarily still just members in these, it just makes sense to kind of roll through them a little bit. But we'll run through that real quick here. So for anyone that's not in the group, it's kind of a treat for you, I suppose. Yeah, let me share my screen and we'll do that real quick here. We'll get rid of this range. And I do need to update this one. Did we set a new daily in? We did. It's a pretty nasty candle right there, to be honest with you. Yeah, so kind of cruising out to a little bit more of the high time frames here, specifically the quarterly. Quarterly doesn't end until the end of June, so keep that in mind. But you can see where all these lows are coming in at, right? And you can see where the body closures are, okay? So in terms of quarterly body closures, this 35K level is going to be one to really be keeping an eye on. Not because I necessarily think that, you know, we have to go back to it. I think it's in the cards because obviously there's a gap there. It's just under the right conditions at some point. You know, we can't trade for that until that trade presents itself. Which I do think we're in a territory where we're going to get that opportunity, you know, at some point, maybe even in the next like 6 weeks. But we will keep that level in mind. So quarterly level needs to be had. And then we really have to be looking down to like the monthly here. All right. So the monthly is a big level, showing us a few things. One, this is your, you know, SFP from the summer, from when we were down in the 28K range. So this was actually a really important level altogether. And then obviously we have the June lows. So you could really mark this off as a zone right here that price really cannot exceed this box. Ideally not close below 29,800 in the next, 4 days? I think there's 31 days in May, right? So now when you go back to something like a weekly, the weekly looks pretty bad because you've closed below these levels. Not a good sign. Doesn't mean you can't just reverse from here. But with the monthly close coming up, it's very relevant to kind of peer into this idea that we haven't really closed below 29,800 on a material closing basis in quite some time. So for me, this is an area that I'm really keeping an eye on. All right, cool. I will be looking at for the next 4 days, because if we start really closing below the June lows and this SFP low, we have to think that this is probably going to take the overall lows and at least fill out this overall box. And this was the box I gave you guys in December, the Doomsday box, right? For this time period. And it's been a 22% bounce. That's a great bounce out of this zone. The problem with that is you know, you got 14 to 16 days of sideways action. I think that if it did come down here and take the lows, we'd probably see a bounce. We'd have some, divs built up. A lot of people would be looking for 20K. It'd be that kind of like, if you've ever seen a price go back to a golden pocket, I think a really good example is over here. You had a really, really nice golden pocket. If I recall, from here to here, this is like going way back. But you came down to the golden pocket. You got the really nice bounce. So again, this is a phenomenal bounce, right? 10% at the time. And then you came back and you actually took those lows, getting everybody out of the market. Everybody was bearish, still looking for lower. I was still holding shorts from up here because I was trading this as a range. And I did end up changing from those shorts into longs here. But it was one of those things where this really compressed for a long time. I'm not saying that's what we're going to get out of this range, but what I am saying is it's very, very possible, because we are in the macro golden pocket at this point. That's part of this box is built up from this overall golden pocket and this idea that we've already come through it here. We could come back down and take this low and then, regain the levels and start stair-stepping our way up. That would be something very indicative of what we've already kind of done here, where you start setting in a base if we're going to set one in. That's if. So if you were going to see a move like that, you'd really want to see it take these lows, reclaim them, and start reclaiming some ground in the short term very quickly. It's a pretty volatile move, but at the same time, presents some really good trades. Volatility always presents good trades. So I just wanted to put those two levels kind of in your guys' minds for the next 4 days for that reason, just because of the relevance on the closures. 35K, obviously not a great sign to be closing outside of 35K, but more importantly, in the short term and more relevant is going to be 29,800 and $28,726.50. So that is kind of that little window here, about $1,000, give or take, of price action that I would be keeping an eye on for this monthly close at least. Could give us some good indications of where price may be going. Looking at the fork, yeah, you could easily come down, fill out that box, right? Take the lows, tap into it, and off you go, So that's kind of how I would look at it if I were trading this, I guess. I would just have that scenario in the back of my mind, because I think it can present a really, really good trade for anyone that actually missed the low here, which I think a lot of people did, because it was a really obscure low. So it is one of those things where, bear that in mind. And we may not get there. We may recover 29,800 because, again, still have not closed below this level. 4 days left. So or 5 days left, technically. A lot can happen. Well, I guess technically 4, because it's the 27th according to Bitcoin price, because it's already ticked over. But it's 26 still, according to my time. But reclaiming 29,800 is what you want to see. You want to see this level holding as support. Once that does, we can challenge up into like this 31.2 to 31.7. Anything above that, and yeah, we're probably looking up to like 32.9. But realistically, if you were just to kind of zoom out a little bit and run some different types of ranges, specifically looking at what we've got going on now, where you can see that you're really building up kind of a shelf here, right? And zooming out once more. And I think we were looking at quarter. Yeah, there we go. And then, of course, here. So when you start looking at this and saying, man, if we can't hold this ground right here, where you've set these massive volume nodes, right, across multiple time frames, one would think the only thing left to do is to challenge into the low again, right? So it's very important to be hanging on to this little $1,000 window over the next coming days, in my opinion. Only my opinion. So I wouldn't chalk it up to anything but that, I guess. But that's just something to keep in mind as we go forward here. A lot of people will be pattern trading this as a nice descending triangle. Can't argue with them. It kind of looks like one. So very well could break down. This one, we traded this one to the downside, but anytime I see a descending triangle that's that clean, it always makes me wonder. And you did have one right here. It was extremely clean. This was a very nice, clean descending triangle that you can see that was coming across here, right? So you can kind of see how that's starting to shape up right there. Just boom, really nice breakdown. So those can definitely happen, even though they traditionally don't happen like this, where it's off of a dump. Those are typically going to be a topping pattern, just so for anyone that knows. I started in this market as a pattern trader, and statistically speaking, you don't really want to trade those after a big dump. You really want to be trading them after pumps. So this is a really good example of a descending triangle there, and you did have the all important one that came in over here, I guess, that was, you know, pretty long and epic actually. So it very well could end up being a descending triangle. You just have to kind of trade it for what it is. And right now, there's really no, the signs of strength are going to be, well, recovery of 29,800. You guys can see by itself that we've been talking about 29,300 being the early sign, of course, and I said that'd be kind of quite bullish in my opinion. But if you're being extra conservative, I mean, 29,800, a reclaim of that level would be, you know, I would be pretty confident that this would go at least to the range highs, you know, and that's what, 30,700. Again, like another $800 move, but I'd be more apt to think we challenge into this zone than anything at that point. You know, but that's again well and far away. Otherwise, you're looking down. So that's all I've got on Bitcoin. Let me make sure I'm not missing any questions before I move on. Nope. Last one was Dennis that I see, because this should be merging both chats from both CVO stream and my own. So that should be pretty good. I will run through a few alts. You know, alts are tough right now, guys. They're going to get crushed against Bitcoin. Somebody was asking about Bitcoin dominance. This is something I asked CVO to cover because I normally leave him up to the Bitcoin dominance in altcoins. You know, I obviously chart them. And I do it well. It's just, you know, I let him have his thing and I have mine. It kind of helps keep me focused, so to speak, on what I'm doing. And I'm sure for him as well. So I'm trying to remember where I have my Bitcoin dominance chart. I had a really simple chart for Bitcoin dominance. I don't think this is it though, because I had text on it. I had written, but it looks pretty similar to what I was looking at. No, but let's take a look. This is when you look at things and you just have way too much going on at one time. You can really do your head in. Yeah, we're looking for at least the summer lows here at a minimum, maybe lower. Well, my take profit's lower than that, so I hope so. But once this breaks down from this fork, we'll go into trend mode, and we'll start looking for the EQ and lower. If I should say if we break down, I shouldn't just assume that we're going to. This is a nice fork that you guys could put on your chart, but really catching what we have going on here is a nice flag, obviously, and then you're breaking down to the golden ratio and the 50% of the next channel down. So technically, the target of this is the 50%, which it did hit spot on. Now you would be looking for the low of the range if it breaks that. One could throw the other golden ratio on there as a pit stop. You could say that this could be a zone. This is like the EQ as a whole, the 382.5 and 0.618, like a really big wide zone at that point, though. The levels will play, but, you know, I don't know. That's not something that I'm willing to dollar cost average $5,000 into, but that's because I trade. You know, if it was putting in a really large consolidation like this, these are weekly candles, by the way. Yeah, sure, I would be building a position, but we don't have anything like that right now. Same with right here. You can build a position on an asset like this. You can build a position on this. You can build a short position on this, and you can build a position on this. This is actually really nice, but you can't really do anything with what we've got going on. That's not build a position market structure at all. I'll buy some, but I'm not really getting into it like I should. Like what some people are. Like what some people are going to tell you on the old TikTok and YouTube. You know, some of those guys, the stuff that comes out of their mouth is pretty wild. You know, I may not have it, and that's okay. We'll just work off of this one. This is an old chart. I have not touched this chart ever since. So you're just bouncing at the 886 with the 618 as resistance. You could just eyeball this as an overall range if you wanted to, like straight away, without doing any real work on this chart. You have a very clear range, right? So you can just toss it on there, and you could say that at a minimum, we're expecting at least 48% probably out of Bitcoin dominance if it were to come back up here, right? From there, we really could just work out some fib work. I don't chart Bitcoin dominance too much. I'll do Fibonacci and stuff just to kind of, you know, get an idea of what's going on. But a lot of times you can tell when an asset is bullish and when it's not. And just looking at this chart right now, you're putting in quite a good low here. You've come up past the 1-to-1. And let's see where our 1618 is coming in at. Yeah, coming in right around that 48% area. So, you know, I would, if it loses, you know, maybe this 44% area, we can talk about, you know, being wrong on this. But in reality, I would expect this to probably continue up into this 48% area. And it's at 46 now. But you can see what happens even when it jumps up just 2 or 3% when the market cap is the way it is on an asset like this. So for me, I would look at Bitcoin dominance as probably going to rip pretty hard. You know, I don't know that it's going to rip so hard that, you know, everything goes straight to zero or anything. Nobody wants to hear that. I continually, you know, chime in and make fun of a lot of the guys that are like altcoin maxis and think that Bitcoin's old technology. Because I think that they've completely misinterpreted technology at that point. But, you know, that's only my opinion. So for me, yeah, I mean, at a minimum, you're probably looking between 48 and 52% for this. And that's just a retest of this old structure, really. I don't know that you'll see 60 again anytime soon, but if we do, you can bet even the short move up on Bitcoin dominance is going to absolutely just wreck altcoins. And Bitcoin dominance goes up when Bitcoin is going down. Remember that. It can also go up when it's going up, but when Bitcoin is going down and Bitcoin dominance is going up, it's usually not a good thing for altcoins. It means people are hedging against the idea that you know, altcoins are going to do well against Bitcoin. They know they're both going to drop, but they'd rather be holding Bitcoin because it's going to drop less. So smart money is not going to be buying these speculative assets that don't have any actual product or anything, that are just all white papers and, you know, promises, right? So just keep that in mind. I'm not saying don't buy altcoins. I'm just saying be careful. You know, I'm being cautious. I have altcoins that I'm willing to DCA into, but even then I'm being pretty cautious. So, you know, I'm not out buying FTM or other things just because they're down 80% or whatever it is. So as far as altcoins actually go, we'll look at a few of them. We did talk about Ethereum just the other day. I keep getting asked if Ethereum is going to go, and there we go. There we have it. We did talk about Ethereum hitting back down into this like 1730 range. Being the really important level was 1800 and 1730. These are the levels I gave you guys in March, actually, on Twitter. For anyone that's not in the group, these are publicly posted, right? So these are the levels you want to watch. If you lose these levels, you have a few below you that you really could work off of. You have 1646. It's a $100 drop, not a big deal, but you do have one down here at 1418. That's a big deal. And you can see market structure wise why it's such an important level. And those are really the most relevant levels in the near term that you should be watching. High time frame wise, you know, how low can it go? Well, I mean, you can look at this and see this. If this structure starts breaking, especially you lose $1,400, the previous all-time high, it's like Bitcoin. It can go really, really low. Everybody's saying, can it go sub 1,000? Absolutely, it can. There's no reason why it almost shouldn't at that point if you lose this like $1,400 level, if you lose the previous all-time high. So keep that in mind going forward. I personally did buy some Ethereum in this region. I had bids set, but most of my bids, I think the video is still up on my YouTube. It's an old video from my other YouTube channel from back in the day. I was looking for Ethereum breakouts in like the, you know, $100 and $200 range, and I was targeting like $700 to $800 and then some. So for me, my cost basis on Ethereum has always been in these like sub $200 regions, so I'm not too worried about it. I will acquire more. I've taken some profits, of course, but I'll acquire more given the opportunity if it comes down to these levels. But I have begun acquiring some in this region. So Ethereum's a basic chart. You had to regain 2130. You didn't even back test it formally here. You kind of came up and then down. I think we talked about this last night. We were really expecting this to kind of just roll over. Same with a lot of the other altcoins. They all kind of look the same. Like Algo was another one. Looking for 33 cents on Algo. Would like to see the reaction at 33 cents. If 33 cents doesn't hold, there's really no reason you won't see 21 and 15 cents on this coin. This was the accumulation range. That video, I don't know that it's up. It's from, again, my old channel, but we were covering Algo at like 26 and 30 cents for this breakout, back in 2020 and 2021. So it's one of those where we're back inside this range. This is where you want to be putting on a position, actually building a position, because this is where accumulation has taken place in the past. But the problem with that is you have to be prepared if you're just going to blindly DCA into this, that even from its current stance, this is another 57% down, so you have to be somewhat careful with it. You can't just be blindly going into things. I think we said we'd cover XRP. I haven't looked at the XRP chart in a little bit. Just not a... I've made my stance clear on XRP a long time ago. There were opportunities for XRP to trade higher if it was going to rotate certain ranges, and it failed at every attempt. It really did. This was the area to get back above, right here, 88.8 cents specifically. And then you really were looking at $1.09 being the most important level. Really a massive point of control coming in there on multiple time frames. But if you're looking at this in terms of merged data, you can see that you lost your value area high here from the prior consolidation, giving you a much larger range now, which you can see is, this is Bybit. It's much better seen on Bitstamp, actually. We'll go to Bitstamp real quick simultaneously. Computer's running extra slow, even though it's supposed to be faster than my old one, so I don't understand that. That's done my head in a little bit, is how slow this new computer has been, but it doesn't hardwire into my internet. It's all wireless, so I got to figure that whole bit out. When we go to Bitstamp and we take a look at XRP on the weekly chart and get rid of this pitchfork here, and we'll go ahead and look at this in terms of an overall range. Oh, this is Bitcoin. There we go. This is it. You've got a really big level you're trying to hang on to here, right around 39 cents. You bounce from essentially the bottom quarter or the old back test of this structure, right? If you lose this level, one would think you're going back to 19 cents. You have NPOCs to justify this at 27.73 cents or 29 cents if you were just coming up to this overall shelf right here, showing that you do have another leg down in the cards potentially to come back and touch this. I don't see why we wouldn't. So for me, if you were looking to buy XRP, the time to DCA is down here in my opinion. Point blank, this is just a giant range on this asset, and you can see how well respected it is. Let me get rid of this here, and we'll get rid of the fib retracement, and now you guys got a fairly decent idea of what's going on, right? You can see the levels and how well respected they are. So you've lost the EQ of your range. You had the attempt here at putting in what's called a partial decline, where you don't have enough sellers to push it back to the bottom of the range. I don't normally trade things like trend lines or anything, but you very easily could have just drawn a trend line and been like, hey, we've lost our uptrend, and down it goes, right? It doesn't take a rocket science to figure out this is a giant descending triangle. Saw people calling it triple bottoms, double bottoms, all kinds of stuff. None of these are correct. This is a descending triangle about as point blank as it gets, right? And a lot of the market looks that way, and you have to look at the rest of the market and say, does it make sense for XRP to do something against the grain when Bitcoin is trending to the downside, putting in bearish market structure the whole way? It makes 0 sense to be putting in long-term swing position longs here. Even I'd said you can take these longs. They're good bounces till they're not. This is good support until it isn't. This little box here, right? The problem is if you don't have a stop loss, you're going to eat 50% of that position. And the people that didn't have stop losses bought in at 62 cents, watched it go all the way down to, I believe, 33 cents. And I think you've got an opportunity to see lower still. You could still see 29 cents, 27 cents maybe as low as this 19-cent area. This is the area you want to be buying in at traditionally on this asset. The problem with that is, though, is if you start losing this level, where did I put that? It doesn't matter. We'll just mark it out. You start losing this level specifically right here at 14.567 cents. If you lose that level on a closing basis, this will return to 2 to 3 cent region. It will come all the way down here. You will probably back test this area of the chart. I would just put a box right here on doing zero actual work, and that's really doom and gloom for this asset. But, people have to be aware that these things can happen. You would be looking into this region. That's, like some serious doomsday stuff. Like the price of Bitcoin has probably gone to the 14K level at that point, things like that. Because I think if Bitcoin really did retrace like $14,000 or $10,000 or whatever, some of these like astronomical numbers that are being put out there, which, you can't say can't happen because anything can happen. But if you look at this and we say Ethereum can go sub $1,000, because it can, does that mean it will? No, we have to trade the levels in between before we can say that. But the same goes for XRP. These are tradable levels. This to me would be a very nice bottom. This is a good place to be adding positions until the market says otherwise, because we don't know what's going to happen when it gets here. However, you can see straight away that this looks like a giant double top. And if it double tops out of this region out of a 3 to 4 year consolidation, because this started back in 2017, would be finishing in 2022. It's actually 4 or 5 years. One would have to look at that and think that this is going all the way back to the consolidation lows at this point. How low it can go really is the game. And all those people that said they were going to hodl XRP to 10K will be, there's no way they're holding that coin. That is where you really see who's going to hold this coin or asset, or maybe the company dies at that point and the SEC just shuts all of crypto down. Who knows? But I would be very careful, holding positions if you bought up here and were DCAing, listening to some of these influencers that were telling you to, because it can get worse. This is not a good sign. You do have a very clear channel building, but these don't always mean breakouts, right? So people are going to say this is a, some form of a, what's the word I'm looking for? Like a falling channel, falling wedge. I guess I'd probably better look at it like so. It's tough because you don't have a clearly defined bottom. You could look at it like this, right? So we could say that this is probably what people are looking at, something like that, like a flag. It's tough to call it that because it's just a downtrend, guys. That's all it is. It's a giant downtrend. If we went over to Bitcoin and we went back in time and we looked at this right here, the same thing could be said. They said this was a giant falling flag or whatever, and it did have a breakout, right? But ultimately what happened? It was a fake out and it went lower, so you have to remember, I would be very careful with falling in love with the idea that once this breaks out, it's going to all-time highs or something, or whatever they're going to pitch, because I guarantee we'll start seeing this if you guys aren't already seeing it. I haven't been on social media much, but if you start seeing people pitching this idea that this is a falling wedge breakout, this is just a downtrend. That's all this is. This is not a falling wedge or a falling channel by any means. This is just a range rotation and a straight up downtrend. And it can totally break out of this and come back up to like 80 cents even, and then come all the way back down to the lows of the range. That can happen. So this is a perfect example right here, right? So you broke down. Let's just go ahead and we'll take a look at this. This is for any asset. So you had a nice breakout here of whatever triangle this was, or pattern they were looking at. We'll call it. Maybe they were looking at this, and they were like, well, we got a really nice wedge, and it breaks out, and then what happens? It makes new lows. Same thing could be said right here again, right? We had a nice falling wedge. So again, this is why it's for lack of a better term, this is a trader's market. You take the trade, you take your profits. What do smart players do? They took their profits, and then people held the bag to the lows, right? You don't really want to find yourself in that position. So you really have to adopt a different mindset in terms of, just hodling, because even some of these top tier coins can have amazing drawdowns. And that's tough to look at, when there's clear opportunities and clear ways to benefit in the market outside of just holding these coins forever, especially when it's an underperforming asset like this. This is a very underperforming asset. This is not a good looking chart at this point. It looked good up until about right here. You had potential partial decline. You could have come back up and potentially challenged into the highs again. You had to get back above $1. I believe it was 35 to 41. And this came up to $1.41.6. You know, those were the levels given back in July. And I said, if they didn't go there, it's likely coming all the way back down to 19 to 29 cents potentially. If it loses, I think at the time we'd said 86 cents, but we were looking at 88 cents now that we have updated data. But, you know, who's really splitting hairs over 2 cents? It's a nice chart, you know, so looking towards the lows of the range is not out of the question. In fact, it would be the most logical thing to do. I don't think you want to overlook this 27 to 29 cent region, though, for XRP. So it's not to give any bad news. I don't hate the asset. It's just, you know, the chart is the chart, and the chart matters the most. I know people don't like to hear that, but price action matters more than anything when we're talking numbers. So if we're talking fundamentals, that's one thing. You guys can talk all the fundamentals you want, but you don't get to talk price. They don't go hand in hand. They don't. Fundamentals don't matter, man. They just don't in terms of price. Strong fundamentals will show themselves in terms of price over time, and the chart will show it first. That's just the fact of the matter. So make sure I'm not missing any questions or comments. I do a lot of Link TA, yeah. Link TA, man. You want to see Link TA? Well, it was on the table. It was always on the table, but I didn't think it would happen, but it did happen. We had one level marked out on January 28th for Link. It was posted on Twitter. I gave you guys one level. It was $3.82. So if you want to know what I think about Link, if the rest of the market's going to hell in a handbasket, this is where you're going to find Link. And that's just a retweet of an old tweet. So be point blank about it. And Link is a big holding of mine. I'm a sub $2 Link guy. I've been in Link since 2020, since the COVID crash. You're giving up really important ground here. This was a massive order block that you didn't want to lose on a weekly time frame. So we are coming into macro fib time for both XRP and Link, by the way. So this is the fib time for this asset. And yeah, you're coming back into this range. Realistically, unless you start living back above $9.30, which is your overall TPO value area low and point of control from ATAS. I believe right here. Take a look at that. Yeah, there you go, 930. Okay, so you see your order block right here, and then you've got the 930 value area low. Unless you've regained this level, it is tough to say that price won't eventually get back to the levels we were just looking at here on this chart at $3.82 for this asset, and then evaluate from there. So, but this is macro fib time. So for this asset, this is a week fib time, just so you know. So it's a weekly fib time. Same fib pool that you saw on my Twitter here, the Twitter campaign. I actually made this pool back in 2020 and used it for the all-time high, this local low, and now this low. So this was actually a really reliable poll. This is a daily chart. Let's move to the daily chart on this one so that we're looking apples to apples here. Right. So this would be your, and let me get rid of this right here. Your fib time coming in, and it shows the 30th, give or take, about the 30th. So I have it up on the weekly, the week of May 23rd to the 30th for this asset is going to be a big one. So this final week of May, which we're coming into this fib time now. So I would expect to see this thing start trying to, this is the golden pocket, which is a big one, trying to put in some form of a bottom, but that also means it can go really low, man. And that's not what everybody wants to hear. But it also means it could go lower, and until this regains $9.30 and holds it as support, no reason not to think we won't come down to $3.82 over time. Lose that, and yeah, you're coming all the way back down to the 228 region, and you know, that's again getting ahead of ourselves. The only target I have on this chart right now is $3.82. So that's what I have for Link. Ken Griffin, crypto is trash, Ponzi scheme, scam. Yeah, I'll have to. I just wasn't expecting it because I bought this thing like months ago and I never like actually synced it up because there's so many platforms that I trade on and so many passwords and so many tools that I use. And it was just such a hassle. So I spent some money and worked on the other one, upgraded the processor on it, and the audio port shit the bed on me. And yeah, so I got this thing booted up. I was actually in the same process. I had ordered new screens, so I'm getting used to like the whole ultra wide thing. So it was kind of like a hectic week, but yeah, I just need to bite the bullet and get it synced up with some kind of converter or something. Yeah, we'll look at DOT. You know, and I'm not saying don't buy in this region, by the way, guys, if you believe in the project. I have bought here. I straight up did. I've told people I did, but I also know it can go lower. So I'm not like overexposed. I did expose myself more on Link than I wanted to be very blunt. But, you know, sometimes you have to make your bed and lie in it. But, you know, the other assets I've done very well in. So for me, it's like, it is what it is. You're not going to be perfect in every trade. You know, the analysis was there. It's just poor execution on my part, which, you know, happens to everyone. It really does. So DOT. Oh, we're on YouTube. I need to look at back to the old shit coins chart. And XLM to pair up with XRP, by the way. I only mark these out because they're local lows, but really looking for like 4.4 cents if things get bad. If things get, these are like doomsday targets, guys. We're talking like, you know, if the range is lost type thing and Bitcoin makes that dump to like 20K or below, you know, those are the targets when they become real. Otherwise, you know, this is a range until it isn't, you know, between the low of the move and the high of the move. Trade it accordingly. You get a nice SFP of these lows, it could give you an opportunity. You just have to be patient and actually trade the price action because blindly dollar cost averaging is, you know, it's a risky thing and people are finding that out. All those people that told you all these years, just buy once a week and it'll be okay. Like, well, it's not really how it always works. I'm gonna be honest with you. If you've accounted for that and you're cool with it, do it. If you're not, well, I stand by the fact that this is a trader's market, in my opinion. So traders will rule this market for a while. DOT has bounced from our channel lows very nicely, held it. Needed to really hold on to 930, which ironically is the same level for Link. If you lose this, you know, we do have some support here that we've already bounced at. The 12M from 2021, we pointed that out once. It was only previously tapped one time. Really nice bounce off of it. So again, I would say that if you make your way back down to this region, like if Bitcoin dumps back down to the lows of its move and you make your way back down to this region on altcoins, which, you know, they don't look, this isn't like the sign of health or anything, health and fitness for this asset. I would be looking at a retest into this 683 to 628 area over time. And if we get that, well, I think it's still bounce territory. If you lose that though, yeah, $4.19. I mean, those are the only levels I have on my chart, you know, 683 and then 419. For me, I have bought some DOT here. I was buying down in this region. I actually traded this a little bit, so I did pretty well on DOT compared to like Link. I traded DOT more, where I took the bounce here off of our first target, and then took it back up to our old resistance, bought again, sold some more here, and then, you know, I started DCAing again here, but I haven't gone like heavy in the paint like I did with Link. Link is one that I was really itching to get back in because, you know, I'd waited a long time for Chainlink. So it was one of those where I was excited, and you know, that's what happens when you bring emotions into things. So DOT, I would be willing to buy more of this. I like DOT. So if it comes back down to the lows of this, which again, bottoming out before a lot of the other altcoins will bottom out, in my opinion, I'm willing to risk the biscuit a little bit down here. I'm not going like all in or doing anything I can't afford to sit on for, you know, an extended period of time. But you guys have to remember, if you come down to these lows, you'll probably get a bounce. But, you know, realistically, if this is going to put in any kind of a real bottom after a move like this, I mean, it's going to take time to reaccumulate. You know, you have to really give these things, and like once you get a nice accumulation range, which could be fairly large, it could be between like $4 and as high as like $12. You know, that's 200-300%. You could have a massive accumulation range on this thing. We saw it on Algorand. Algorand was a perfect example of that. How big an accumulation range really can be. You know, once you're in it right here, like this is your accumulation range. You just kind of, you know, dissect it a little bit with the levels. We could get rid of those, but realistically, look how big this range is. It's from 15 cents all the way to 50 cents. And you had that range right here. You can see that you went from the lows to the highs, back to the lows, back to the highs. You got what's called, what is this called again, guys? A partial decline, right? So you didn't have enough pressure to push it all the way back to the lows of the move, right? So you have a higher low, partial decline, and that's your first indication that this is going to, do something. Especially making another higher low here, pushing back above, regaining some really key areas on the chart, especially their 40-cent level actually, and then 50 cents being kind of the overall level you really have to get back above and hold on to. So coming back and then back testing this, but the most important level for a long time on this one was 88 cents. So yeah, but DOT, same thing. I'm just waiting, being patient, trying to figure out when it's really going to bottom, because I think that when these assets do, they're going to put in a pretty good sized range. I'm not going to chase the candles too much on these pumps, and I'll play the range once it's there. VeChain, similar thing. We had this box for VeChain for months. I think from December, I was like, this is where VeChain's going to go. It's going to go down to this box, and it did. Does that mean you have to buy it once it's down here? I actually didn't buy any VeChain. I just plotted out where it was going. This was the buy. This was the initial buy right here. This was coming in at the same time we were expecting, if you guys recall, this was the exact same time we were talking about the timeline for Bitcoin reversing. So if you guys are paying attention to my Bitcoin analysis, you guys know that we were looking between January 26th and February 8th. When I joined the group back up here, I said that's when we're going to be looking for a reversal. Okay. Well, we did get our reversal right here. It came in on the 24th, and then again right here on the, January 24th and February 24th. Where did our VeChain bottom come in at? February 24th, January 24th. So if we're looking between the 26th and February 8th, you're looking to start accumulating on these lows, and you get really nice, pushes up. You pushed above some old support that you really had to get back above. This is a really big range low to get back above. And all you did was probably go back and, crush into an old range. Yep, you just ran to the range high. You cycled this entire range and then dumped straight through it. As soon as you give this back up, it's pretty bearish. You have to know you're coming back to this box. And once you take these lows, not much of a reaction here at the low, to be honest with you. Even back tested it. There's no reason to be holding this, just looking at the chart. No one should be just blindly holding this, hoping it's going to go up, because that's all it is hopium. And you can go like this now, and you can see what happens if you start to lose this level on the chart. So if we lose this box on the chart that was made, it's a big box. I don't like giving them this big, but when you get into these shit coins, the boxes are pretty wide because they're pretty volatile. But if you lose this, you're coming back down to this low. This is where you're headed. You're headed probably somewhere down to like 1 cent. And no one wants to hear that, but it is what it is. We'll see what happens with the orange coin. It still hasn't broken down or anything. It's not like completely devastated. Again, the most important levels to watch are going to be 28,726, 29,800. Bitcoin is still yet to close a monthly candle under 29,800. If you guys recall, we've talked about that. There's never been a closure below that in terms of what we're looking for here. So this would be an area to be defended. If lost, though, well, one would think we might get our next leg down. I'm not saying it's going to come all the way back down to like, $10,000, but I guess anything is possible. Is that really the Q4? How'd that get moved around? That's not right. Hang on. That got moved. And I don't know how it did. We'll get that fixed, though. And apologies in advance if I'm just rambling at you guys. I know some of you guys are probably like, this guy's an insane person, but it's part of being in this space for a few cycles, I suppose. Here we go. All is right with the world now. It's kind of like when someone touches the thermostat, right? So yeah, if you're wanting to be bearish on Bitcoin, it's right at the low of the range. You can't really short down here. You can only look at order flow and see if you're going to come lower. we've talked about what you need to see out of Bitcoin regaining about 29,300 and then 29,800, which again puts us back up here where the high of the move, 29,800, and that would get you where you need to be. But if you start losing these levels, which right now you're bouncing from an old NPOC from a session, but if you start losing, 28.7, 26, there's really no reason to not at least close this out and hit this golden pocket somewhere in like the 28.6 to 28.5 range. Anything below that, you would be looking down to 27.6 and 27.5, but those are moves you have to play as you go. Right now you're trying to put in a low here and maybe try to remain inside the range. Because I do think that we are still even inside of our local range, if I recall. So if Bitcoin starts turning around, we get that bounce, altcoins will follow suit, and then all this moon and doom, or all this doomsday talk, well, it's for nothing. You just got to trade the chart for what it is, guys. Nobody truly knows. You can only set yourself up for success, by having a plan. So I don't really know that I have any other altcoins outlined. Yeah, David, that's what we were talking about. Yeah. Oh, I think he was just saying it to say it. I think he's just, I do it sometimes where I'll go in and I'll just kind of FUD the chat just to FUD it, just to see if I can't stir something up. He's probably just doing that. No harm, no foul. He's not hurting anybody. But yeah, really got, not much else to say unless Max has got anything on the order flow he wants to talk about that's happened since I took over for alts.
No, we're still stuck below the WAP. Nothing's really happened. Volume's just dead, to be fair.
Well, yeah, we haven't done anything. So for me, it's still, I'm looking at 29,300. I'm looking at this, building that shelf. You can't let that happen if you want to see this continue up. So you get above 29,300 and there's hope. Otherwise, yeah, probably, it's like you said, the statistics don't lie. We'll probably fill out some of those PVAs you talked about, and then we'll see what happens in those regions. You can only play the reactions at that point. But yeah, it is getting wedged between the daily pivot and that VWAP there, isn't it?
Yeah.
Yeah. All right. Well, I don't have much else. Appreciate you guys tuning in, for those that did tune in. So does anybody have any questions before we jet here? I know there's only about 11 more people watching, it looks like. So always appreciate everyone that came out. Thanks, JBW. We appreciate it, my man. We try to do some hardcore analysis here, as this is more of a trading group and we don't do much fundamentals. So it's different to get exposure like that, I suppose. But we appreciate it. Yeah, no problem, David. We appreciate you too. Thanks for joining. So we did go over Lincoln Dot. If you go back, we definitely did. OC, you might have missed it. Just scroll it back. Those are actually two of the coins we covered towards the end there. So if you have any specific questions about the analysis, oh, he's just messing. I was like, if you have any questions about the analysis after you watch it back, tag me in the group, man. We do a public live stream every Thursday night, and then me and Max and CVO's in Europe right now at a wedding with a buddy, but we'll do like morning live streams for the New York session. We don't really cover the macro as much. And I haven't updated the YouTube or TikTok on like a macro update in a while. But if you're subscribed both on TikTok and YouTube, I can tell you the next video I put out you're gonna love. It's gonna be pretty wild, and you'll enjoy it, man. You'll see some things that you're not gonna see in other places. Basically, calling the low here to the day months in advance, because not calling it because you can, but showing you that when you should be looking for a reversal on how to use certain tools. But yeah, that'll be coming out. So. But yeah, subscribe, man. We love having you around. If you ever have questions, pop in the chat. More than happy to, help people out if we can. So otherwise, I am going to hop off here. It's 10:15 here, and I'm going to try to relax a little bit before tomorrow morning.